one of you for dancing with me, baby. Wag me, baby, wag me. Bitcoin. Chat Soul getting a nice bounce to the upside off of that 618 golden Paquito. This thing is hot. And I think Chat Soul is going to be something big coming up. But you do you. I do me. And maybe we can meet in the middle. Shout out to everybody here on the live. Thank you for jumping on in. Appreciate each and every one of you for being here, sharing your most precious asset with me, and that is your dog. We on fire right now with Jerome Powell. Jer Powell. He's getting ready. He's about to bring it to us live. That's right. We back, baby. We back. Bitcoin, baby. AIOZ looking like it's going to make a huge move here to 154. I'm in it. So, of course, I'd like to see that. But look at the 6-hour stochastic. Look at the falling wedge on the RSI. And look at the MACD, baby. And this is like the hottest coin of the game. The hottest D-pin coin you could name in the game. I knew about it when it was 30 cents. I was putting it out. When it was 3 cents. This thing has already done a 30x, basically. Absolute insanity. Let's keep it moving. Where's my AIOZ? Shout out to everybody here on the live. Thank you for being here. I like volatility. Same here, Jonathan. Exactly. Bro, do I miss the stream if not a member? No, you'll be good to go, man. You'll be good to go. We still have liquidity all the way down below us here at 58, 60,000, but they could be spoofing. They spoofed us before at 39. We never got there. But where's Big Red above us? We don't see the liquidity above us. I just don't see it happening at the present moment in time. Shout out to the 290 people here on the live. Let's go, baby. Let's go. We back live again. Bringing it to you every single day, baby. I just left the doctor's office. I literally stopped live streaming, rested my eyes for half a second, took my wife to the doctor's office. We had a baby appointment. We just got in the door. I hit the live button. Bang, bang, bang. Shout out to Shano. Dude, I love orange coin. And I got a big old bag of orange. I bought it at the very bottom. I'm super happy that I did. I plunged right in. Something about when you buy. But once you buy, a few days later, it feels so much better. Right? Once you're nestled into that position and you're like, yeah, I got it. I got the position that I needed. Right? Is everything going well at the doctor's? Everything went great. And everybody, I'm signing a lease. I'm going to be renting that house in Florida. I'm super excited. 4,000 square foot, water views, with the pool. And again, I could have better, I could have worse. It's a pretty beautiful home, gated community. Super excited. The house is absolutely gorgeous. I'm just excited, man. Super, super excited. So, yeah, it was listed for 5 days. I snatched that thing up. I did not wait a second to grab that crib up. Yeah, I'm moving to Sarasota, Florida, everybody. I can't believe it. Like, today's the day I find out, like, I'm actually moving to Florida. I'm nervous. I don't want to say I'm fearful. I'm nervous of just all the packing I got to do. You know what I mean? How do I move my stream? How does it all happen? You know, but I got my travel set up for when it will get me through until I get my studio back up and running, but it's just going to be tough. I'm going to be in transition for a couple weeks until I get everything up and running back where it is. Tennis and golf, baby. You're blessed and highly favored. Amen. Thank you. Lifer on the beach, baby. Yeah. Lifer, I have these Florida people adopting pugs for me this weekend. If you ever want a pug, come see me in Alabama. I'm all set with the pugs, but they're cute little dogs, man. God bless you and your plugs. Shout out to CMAS. Congrats on the place. Thank you, man. I'd love to show it to you guys, but you could probably easily find my address if I even show you the pictures. It won't be that hard, so. But it's gorgeous, man. I can't believe it. I can't believe it. Pinch me, I'm dreaming. You know what I'm saying? Yeah, I need a moving. I'm originally from Miami, Florida. Cool, man. Moving and packing service. Yeah, we're going to get a pod. You know, one of those pods, I guess. We're going to fill the pod, right? Slowly, a couple friends here and there, and then they're going to take the pod away, right? That's my idea. I don't know if, you know. But there's a lot to do. There's a lot to go over. It's a lot. It's a lot. But you know what? Nothing ventured, nothing gained, baby. Dude, Pendle never stopped. Look at Pendle. One of the hottest coins in the game continued to pump to the upside. That's that Egan layer points, man. Man, I can't imagine living in Florida. I love the winter too much. That's so crazy. Congrats, Sam. All the hard work is paying off. No state tax. Exactly. It's going to pay for half my rent immediately. Right off the bat. You know what I mean? Deja vu to Sam in 3 to 4 hours. Yeah. Where do I see AIOZ going in 30 days? Just where the charts show me, right? So Bitcoin, look, we saw this head and shoulder pattern on the 1 minute. Had this kind of shoulder head and a little right shoulder there, or shoulder head and a little right shoulder there. It was this one here. And it did dump like it was supposed to. And then we pumped, and then we had the shoulder, the head, the right shoulder there. You see it? Shoulder, head, right shoulder, back to the upside. Now we're back at the flag. Remember the flag we were watching? The 7-minute flag. Let's get back into that 7-minute status here as you get ready for Jerpa. Now, they brought it down. They brought it back up. To me, I think we're going to, I'm going to speculate on Powell. And to me, it's a nothing burger today. He's just going to half answer questions. He's going to dance around. They're going to say, well, if monetary policy was fiscally responsible, then why aren't you? And he's just going to be like, well, I was, but I didn't, but then I did. And they're like, but we don't talk about that here. We think, we believe, we have strong reasons to think that after these meetings, I mean, we don't know, but the meetings are what they, blah, blah, blah. And that's actually what you're going to hear. It's going to be a lot of nonsense. All right. A lot of nonsense. So look, there's your flag right there to the upside. I'm telling you, man, just trading small time frame flags, and it's just fun. And it's less stressful. You take the move, you get the move, you make the move, right? So let's get this set up for Powell, baby. And let's get it going. I got more windows than a big house. So I'll put Powell over here on the right. All right. No, on right there. There you go. Okay. March 20th, 2:30 p.m. They're live right now. Oh my God. 15 minutes to countdown, everybody. 15 minutes. It will go by fast, and then we'll hear them. So just get ready. We're going to be here live streaming Powell. I moved myself a little to the right. I got a cool little setup that we're going to be doing. I see Redbeard War Eagle. I see your Redbeard War Eagle. Okay. Shout out to Redbeard. Michael B. War Eagle. Wow, you guys know each other? So crazy. Dollar dumping, Coinbase traffic issues. Pump incoming. Hey, you never know. Seems like it may be the case. To the upside, baby. To the upside. Right? Everybody gets what they want. That's what the plan when you work with me. Everybody gets what they need. And everybody gets what they were looking for. You get what you're looking for. I'm euphoric right now. I'm like tingling. My life is going to change. It's been the same for 4 years. Like where I go to the supermarket, and my commute is so easy. I never drive my car. I never have to go anywhere. Now it looks like my daughter's school could be 20 minutes away. That's 40 minutes in the car in the morning that now it's literally, it takes me 6 minutes to drop my daughter off. We're going to be inconveniencing ourselves in some ways by moving to Florida. You know what I mean? It's going to be some in the middle stuff, but we're going to figure it out. This Pendle is hot. I'd watch Pendle as it kind of continues here. Pull a Fibonacci on this. Watch Pendle, baby. Coming back down to the 618 Fibonacci level. All right. You got to get yourself a pub sub. A pub sub? What is a pub sub? Cloud pub sub documentation. Publish, subscribe pattern. Messaging pattern in software design where publishers send messages in categories that subscribers listen to. A pub sub What is pub sub? Pub subscribe message, or pubs is an asynchronous communication model that makes it easier for developers to build high-functioning architectural complex applications in the cloud. Okay. You have to. The upper limit of the Fed's interest rates resolution remained at 5.5. Please monitor the markets. Yeah, they have changed. They basically, so they came in. The Fed has now changed it to 5.5. Let's take a look at our CME watch tool. And you'll see this move to the right, and we'll see that we have claimed the meeting, right? 99%. Fed has kept it at, we know it's going to be kept at 5.5. We know that. We're not getting a rate cut. It's not happening. And everybody knows that. So that's kind of baked in. I don't know what today really is going to do besides listen to Jerome Powell trip around like he usually does. But he's a great guy. Just close the door. You know what I mean? I still can't believe that came out. That's the funniest thing that ever happened. Like, that was hilarious. Dude, SDAO continuing to moon, and I got this thing in a flag. The 6 hour looks ready to rock. A lot of these coins, like, they were pumping as Bitcoin dumped, and they were so small cap that they got thrown into a pump. Then when Bitcoin got pulled back, they couldn't pull back that much because they didn't have enough people to sell them off. That's what I love about low cap gems. Like, they can almost be impervious to some of the Bitcoin dumps because of this behavior. All right. Limpo was hot, right? Now it's coming back down. Not saying I'm jumping in, but I'm just, Wow, Zignali just continued to pump to the upside. This coin is hot, this Zig coin. And this is another coin on my radar that I kind of wish I got when it first came out. Token Metrics was trending. So you can see all these coins are all on these beautiful flags. It's like they could be ready for their next leg to the upside. Layer AI looks very similar. I dumped it. Remember, I sold my NIR for Layer AI. People look at me funny. That may go down in history as one of the best moves ever. We'll see what happens throughout the bear market, the bull. Did I just say that out loud just now? Throughout the bull market. Look, both those numbers just hit 77. I was trying to see if that one could out of nowhere. It's not easy to do. But yeah, that looks like you get another 129% gain coming to the upside here, right? Swing up to swing up. Well, this is a swing down to swing down. Okay. We get a nice move to the upside. This is interesting to me. I would watch this coin closely too on the 6 hour. This coin was one of the hotter coins before the market took a bit of a, little pullback, little bit of a pullback. Quick though, right? Fast pullback. It's only been a week. The life has changed. 3 weeks ago, weren't we at $51,000? Like Bitcoin has, 4 weeks ago, Bitcoin's at $51,000, right? So much has happened to us in a small amount of time. May God bless you all, man. Thank you for being here with me. And thank you for the super chats earlier today. You people are very, very nice. Blessings on blessings. Shout out to anyone that's celebrating Ramadan today. You get through your fast, lovely. May it present to you good spiritual, vibrations, and may you really, really get the most out of it. Shout out to my mom and dad up in heaven. May they stay blessed. All right. Yeah, the upper limit of Fed's yeah. He goes pub sub, and he rose public subscription. Find out where your next Publix is. Yeah. See, this is like a glitch. You have to allow or block a block. Like I've already said it 100 times. It just takes its time. Oh, a pub sub. That's what you mean. These are pub subs, public subs. Ooh, look at all those different subs. White flour in that bread, though. You got to be careful over time. But, hey. We out here. They're inexpensive and delicious. Anyone else think the same? Pub subs are fire. Public chicken tender is insane. You're funny. Chicken tender, very unhealthy. but very good. I know, right? Tendies, baby, tendies, right? So this is what we're going to do here. I usually shrink myself down. I move myself on over, all right? Hey, okay, guys, my voice gets smaller because I shrink. Guys, I can't even. Hey, you want to look at the TA? There's a good amount of TA coming because I get bigger, but when I get smaller, my voice gets really small. I can't talk. That's so funny, right? It's like, it's what happens, right? You get so small, your voice small. Guys, I can't talk. I'm so little, guys. I just am in just a tiny little thing. Blah, 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 blah. Oh, man. I've been the class clown my whole life, man. If I can get a laugh out of you, I will. All right? If I can get a laugh out of you, I will, for the sake of getting you to laugh. If that's all I can do. All right? If that's all I can do. I'm going to go to BTC USDT.P. I'm going to hit that perp up on MEXC. Let me just expand this for a second. Look, I see an inverted head and shoulder right there. Right there on the 7-minute. Shoulder, head, right shoulder to the upside for Bitcoin. Right? That's it. I mean, that's an inverted head and shoulder. Shoulder, head, right shoulder to the upside. Rising wedges break up 68%, only 32%, so it's more likely you get a dump, but you got that shoulder in there. So we're going to be watching how this interacts closely. Unlike the 1 minute, if we have to get to the 1 second, we will. Staying above the 200 SMA on the 1 minute is key. Still got this kind of double top vibe, you know. But look, that eventually did break up to the upside. We got the move further up that we wanted for earlier. Dipped below, dipped back above. And here we go. Only 6 minutes left till Jer Powell comes on. I even keep this up for us too, just so we can see what's happening. What's happening with Bookmap, right? And then in the background, we will have Jer Powell. Right? So this will be the setup that you're going to get. You're going to be able to see Bitcoin up above me here. All right? You're going to see Jerome Powell talking in the middle here. And you're going to see Bookmap on the left and me down at the bottom. Mostly quiet. And we're going to be, watching how this market plays out. Are we going to dump to the downside or to the upside right here? We either get the rising wedge break down or the rising wedge break up. The rising wedge is really just a skewed version of a symmetrical triangle, if you think about it, with more downside behavior on it, right? And they're still playing that music. Wow, I'm excited to see what he has to say. Who here can't wait to hear what Jerome Powell's going to say? I feel like we got a nothing burger today, but I actually enjoy the commentary. And I know all of the journalists now, like by name, and it's like, there's Cody Smith and Colby Smith and Rachel Spiegel, right? It just all the fun, awesome commentary there. I'm excited. I think I'll become a bit of a Federal Reserve meeting nerd. I like the meetings. I usually have my tie on, my blue suit, right? But I just came from the doctor's. I wanted to look somewhat presentable at the doctor's, right? I don't want to overdress. You can never be ever overeducated. You can never be overdressed. Follow me at Twitter, at CryptoLifer33. I'd greatly appreciate that if you did that. We're on our way to 30,000 followers on Twitter if you decide to help me get there. But it's up to you. Only you can do it. We ask, but only you can actually make it real. So I'm at the whim of you. I'm on your whims, man. Could you hook me up? It would be cool. Look at my new whip, man. You know I got that new fresh whip. 13,000 views. This thing went viral. Boom, the Fed interest rate is expected 5.5. Let's see what Jerome Powell has to say in 30 minutes. Bang, bang, bang. Right? So we gave you the news here on Twitter. I got to follow this at airdrops. Free money out the sky. And let me just see which one it is. Airdrops at 1_1. Right? Yes. Right. There we go. This guy will tell me whenever the airdrops are coming for Cosmos. Current and future Cosmos airdrops. See a cool airdrop? Let us know. Airdrops.1. The Pyth airdrop. Dude, the Pyth airdrop that actually works via Injective. Pyth Genesis airdrop for Helix users. You may be eligible for airdrop if you interacted with Helix on Injective. Interesting. So you get Pyth airdrop through Helix. Stake Cedo on distribution. I do stake Cedo. They're my validator. Distribution is direct to your Injective wallet. Check Pyth/Injective spot market to see the balance. Shark airdrop is live. Shark Pool. Archway. Saga mainnet coming out in 7 days. Left to claim the Saga airdrop from Saga XYZ. Some of them are smaller, right? I mean, 1 minute to countdown, folks. 1 minute to countdown. I'm going to bring my music on down here and, get it chill here for a second. All right. Let's get ready for Jer Powell. I'm going to mute the follow label, mute the cheer label, mute the subscriber label. I guess I'll keep the donation label up, but they're pretty loud at times. So, yeah. Okay, here we go, baby. Here we go. I'm excited. You should be excited. They're usually late. This is their music. They're usually late, though. Let's see what happens. Okay. Let's see if they're live. They are. Let's go. Oh, my gosh. Like, I'm feeling the anxiety. Are you feeling the anxiety? And we wait for the voice of Jer Powell. $64.4 is Bitcoin. What I like is this little flag here, but again, double top issues. We kind of watching this. We've been sideways all day above the 200. We break the 200, we're going to go down. We want to see if we get that move further to the upside. All right. And already getting a dump to the downside for Bitcoin from 64 to 64,250. Just his face alone makes the market just start to sell off. I don't know. I got to keep you entertained somehow, some way. You know what I mean? I got to keep you entertained somehow, some way, right? How many people we have on the stream here? I haven't checked. Let's take a look here. 1,000 people on the live. That's amazing. Thank you for jumping on in. Let's hit that like button. Let's get it going. Appreciate each and every one of you for being here and sharing your most precious asset with me, and that is your time. Be easy. There he is. Oh, I like that shot from the right side there as he walks in. You know, Jerry Powell.
Good afternoon.
Good afternoon, Jerry.
My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people.
Same story.
The economy has made considerable progress toward our dual mandate objectives. Inflation has eased substantially, while the labor market has remained strong. And that is very good news. But inflation is still too high. Ongoing progress in bringing it down is not assured,
It's never going to go down.
and the path forward is uncertain.
You keep printing money, dude.
We are fully committed to returning inflation to our 2% goal.
Never going to get to 2%. I'm going to
Restoring
run for
price
president
stability is
2032.
essential to achieve a sustainably strong
never gonna
labor
get there, I
market
promise
that
you.
benefits all.
Trust me on it.
Today, the FOMC
He
decided to
lies.
leave our policy interest rate unchanged and to continue to reduce our securities holdings. Our restrictive stance of monetary policy
Selling off
has
securities.
been putting downward pressure on economic activity and inflation. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. I will have more to say about monetary policy after briefly reviewing economic developments.
Look like you lost some weight, right?
Recent indicators suggest that economic activity has been expanding at a solid pace. GDP growth in the fourth quarter of last year came in at 3.2%. For 2023 as a whole,
64,100.
GDP expanded 3.1%.
We lose that 200 SMA, we're going to dump.
bolstered by strong consumer demand as well as improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates.
Look,
High
shoulder.
interest rates also appear to
head,
have
right
weighed on
shoulder.
business fixed investment. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2% over the next 2 years. Participants generally revised up their growth projections since December, reflecting the strength of incoming data, including data on labor supply. The labor market remains relatively tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 265,000 jobs per month. The unemployment rate has edged up but remains low at 3.9%. Strong job creation has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years, and a continued strong pace of immigration. Nominal wage growth has been easing and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue,
They need more people to
easing
work
upward
than people
pressure
want to
on
work.
inflation.
Nobody wants to work.
The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.1% at the end of next year. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%. Estimates based on
Never
the
gonna get
Consumer
there.
Price Index and other data indicate that total
You have a
PCE
better-
prices
getting your whole family
rose
inside this
2.5%
SUV, you have a better
over the
chance
12
of
months
getting to
ending in
2%.
February, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as from measures from financial markets. The median projection in the SEP for total PCE inflation falls to 2.4% this year, 2.2% next year, and 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment.
He sounds
and
like a
stable
computer
prices
today, man. This is
for
not
the
good.
American people. My colleagues and I are acutely aware that high inflation imposes significant hardship.
That 200
as it
SMA needs to
erodes
hold in the
purchasing
30-second.
power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are strongly committed to returning inflation to our 2% objective.
Never going to happen. I'm going to run for president on
The
it.
committee decided at today's meeting to
He just
maintain
made
the
my
target
campaign
range for
so
the federal
easy.
funds rate
Or so
at
much better.
5.25% to
Nothing's easy.
5.5%, and to continue the process of significantly reducing our securities holdings. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are coming into better balance. We believe that our policy rate is likely at its peak for this tightening cycle, and that if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We are prepared to maintain the current target range for the federal funds rate for longer, if appropriate. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably down toward 2%. Of course, we're committed to both sides of our dual mandate, and an unexpected weakening in the labor market could also warrant a policy response. We will continue to make our decisions meeting by meeting. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 4.6% at the end of this year, 3.9% at the end of 2025, and 3.1% at the end of 2026, still above the median longer-term funds rate. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals.
Oh, come on. You can't reach those goals, so what are you talking about?
Our securities holdings have declined by nearly $1.5 trillion since the committee began reducing our portfolio. At this meeting, we discussed issues related to slowing the pace of decline in our securities holdings.
Yes.
While we did not make any decisions today on this, the general sense of the committee is that it will be appropriate to slow the pace of runoff fairly soon.
That's very bullish, everybody.
Consistent with the plans we previously issued.
That's bullish. Market should start pumping right now, right off that news. We should see a green candle immediately right now.
Otherwise,
you're going to stop selling securities?
To approach that ultimate level more gradually. In particular, slowing the pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress and thereby facilitating the ongoing decline in our securities holdings, consistent with reaching the appropriate level of ample reserves.
Look, I got a shoulder, a head, right shoulder.
We remain committed to bringing
to the market, to the upside,
back down to our 2% goal and to keeping our longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and price stability over the long term. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability.
We're getting the green candle that I
goals.
suggest we would off that news. Wow, that was easy, huh?
Thank you. Microphone, right. Steve Leisman, CNBC. Mr. Chairman, the projections show somewhat higher core inflation. They also show somewhat stronger growth. What should we infer from this notion that on average rates were kept the same this year, but inflation is higher and growth is higher? Does it mean more tolerance for higher inflation and less of a willingness to slow the economy to achieve that target?
Well, it doesn't. No, it doesn't mean that. What it means is that we've seen incoming, as I pointed out in my opening remarks.
This meeting was baked in, basically, in my humble opinion,
and so have many other forecasters.
You know what I mean?
The economy is performing well, and the inflation data came in a little bit higher as a separate matter, and I think that caused people to write up their inflation. But nonetheless, we continue to make good progress on bringing inflation down.
Oh, he never does his tie nice. Come on, man. I would do his tie so much better than that.
When you just to follow up, when you say that you're willing to either maintain the rate for longer, what is the tolerance of the Federal Reserve for inflation coming in above its 2% target?
Who's heavy on slurth with me, baby?
We're strongly committed to bringing inflation down to 2% over time. That is our goal, and we will achieve that goal. Markets believe we will achieve that goal, and they should believe that, because that's what will happen over time. But we stress over time, and so I think we're making projections that do show that happening, and we're committed to that outcome, and we will bring it about.
Rachel Spiegel, right?
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for
remember
taking our
everybody,
questions.
Man.
You and others have been saying that relief on housing inflation is coming, but it still hasn't shown up meaningfully in the CPI or the PCE. Does that challenge your assumption about when the shift will finally break through, since it hasn't at that point?
So I think there's some confidence that the market rents, lower market rent increases that we're seeing will show up in measures of housing services inflation over time. There's a little bit of uncertainty about when that will happen, but there's real confidence that they will show up eventually over time. But again, uncertainty about the exact timing of that.
And will you be able to get overall inflation down to target if housing doesn't break through quickly, and does that affect the timing for eventual cuts this year?
We will get aggregate inflation down to 2% over time. We will. And I would assume that what we'll continue to see is we'll see goods prices coming into a new equilibrium where they're going down perhaps not as quickly as they had been earlier this year, where housing services inflation will come back down as current market rents are suggesting will happen, and where non-housing services will move back down. Some combination of those three things, and it may be different from the combination we had before the pandemic, will be achieved and will bring inflation back down to 2% sustainably.
You got this beautiful head and shoulder here. Look, shoulder, head, right shoulder. This little flag's about to
Nick
break
Timmer,
out.
The Wall Street Journal. Chair Powell, during your congressional testimony this month,
That
you
brings
said
us
that
to
your test for making
61.27.
the first
All right.
change to interest rates does not require you to be terribly comfortable that inflation is at 2% because interest rates are well above neutral. At the same time, you said here after the last meeting that the first cut is highly consequential. Can you reconcile these views for me?
Nice
If
tie,
rates
nice
are
tie.
well
I like
above
that.
neutral, why would the first cut be highly consequential? Is that because you anticipate one cut would be followed by one or two more along the lines of the recalibration you made in 2019, which itself was modeled on the mid-cycle adjustment of 1995?
It's more, I would put it more in the context of what I said in my opening remarks, that the risks are really two-sided here. We're in a situation where, you know, if we ease too much or too soon, we could see inflation come back. And if we ease too late, we could do unnecessary harm to employment and, you know, people's working lives. And so, you know, we do see the risks as two-sided. So it is consequential. We want to be careful. And fortunately, with the economy growing, with the labor market strong, and with inflation coming down, we can approach that question carefully and let the data speak on that. That's really what I was thinking.
How much of that inflation that we've seen so far this year do you chalk up to one-off calendar adjustment effects following a period of high inflation versus some change in the trend we saw in the second half of last year?
So I want to start by saying I always try to be careful about dismissing data that we don't like. So you need to check yourself on that, and I'll do that. But I would say the January number, which was very high, the January CPI and PCE numbers were quite high. There's reason to think that there could be seasonal effects there. But nonetheless, we don't want to be completely dismissive of it. The February number was higher than expectations, but we have it at currently well below 30 basis points core PCE, which is not terribly high. So it's not like the January number. But I take the two of them together, and I think they haven't really changed the overall story, which is that of inflation moving down gradually on a sometimes bumpy road toward 2%. I don't think that story has changed. I also don't think that those readings added to anyone's confidence that we're moving closer to that point. But you know, we didn't. Last thing I'll say is we didn't excessively celebrate the good inflation readings we got in the last 7 months of last year. We didn't take too much signal out of that. What you heard us saying was that we needed to see more, that we could, you know, we wanted to be careful about that decision, and we're not going to overreact as well to these 2 months of data, nor are we going to ignore them.
That doesn't make any sense. We're not gonna act like they matter. But we're also not gonna act like they
Chair
matter.
Powell.
Well, what matters then?
Could you
What do you base
speak
your
a little
decision
bit
on
more
then?
about the timing?
Oh, weird.
Is there enough data between now and, say, May to be able to get the kind of confidence that you say that, you know, you still need? Or by June, is there enough data for you? Just give us a sense of
No.
your thinking there. Thank you.
You can't because
Yeah,
they
so
don't know the data.
we make decisions meeting by meeting.
That's what he was
and
gonna say,
We
see?
didn't make any decisions about future meetings today. those are going to depend on our ongoing assessment of the incoming data, the evolving outlook,
Watching
and the
this-
balance of risk. So I really don't have anything for you on any specific meeting looking forward.
But, I mean, just a question of, I mean, is there even enough data for you to be able to?
We'll take,
Sorry.
you know, things can happen during an intermeeting period, if you look back, unexpected things. So I wouldn't want to dismiss anything. So I just would say that the committee wants to see more data
Symmetrical
that
triangle.
gives us higher confidence that inflation is moving down sustainably toward 2%. I also mentioned, and we don't see this in the data right now, but if there were a significant weakening in the data, particularly in the labor market,
Yeah.
that could also be a reason for us to begin the process of reducing rates. Again, there's nothing in the data pointing at that, but those are the things that we'll be looking at coming meetings, and without trying to refer to any specific meeting.
Chris?
Hi, Chris Rieger, Associated Press. Thank you. In the projections, there is an increase in the neutral rate, as you know, and higher rates, a quarter point higher rates projected in 2025, 2026. Can you speak about what might be behind that? Is there a real sense here that the economy has perhaps changed in some way, that higher rates will be needed in the future? Thank you.
Didn't you just say we go day
You're
by
right,
day?
they're pretty modest changes, but you're right, there was an uptick in the longer run rate, and also there's a 25 basis point increase in 25 and 26. In terms of are rates going to be higher in the longer run, if that's really your question, I don't think we know that. I think we think that rates were generally low during the pre-pandemic, post-global financial crisis era for reasons that are mostly, important, slow-moving, large things like demographics and productivity and that sort of thing, things that don't move quickly. But I don't think we know. I mean, my instinct would be that rates will not go back down to the very low levels that we saw, where all around the world there were long-run rates that were at or below zero.
Negative.
In some cases.
Paid you to
I don't
take
see
money.
rates going back down to that level, but I think there's tremendous uncertainty around that.
Great. And just a quick follow on the projections, you also have 2.6% core inflation for the end of this year. It's already or you mentioned it being 2.8 in February. I mean, that doesn't sound like much disinflation at all. So are you still confident, or the last press conference you sounded pretty optimistic you would get more confidence to the end of this year. Is it right to say that this suggests you're not seeing a lot of disinflation this year compared to what we've seen 2023 and so forth?
I think that higher year-end number reflects the data we've seen so far this year.
Nice
'Cause
pump for
you're now-
Bitcoin,
you're now
baby.
in this year, so
67,400. The inverted head
I
and
think
shoulder
that,
breaks to the upside.
Sorry, say your
One,
last part of your question
2,
again.
3, ba-bing.
Are you still optimistic that you'll get the confidence you need this year?
Double bottom.
I
To the upside.
think if you look at the SEP, what it says is that it is still likely in most people's view that we will achieve that confidence and that there will be rate cuts. But that's really going to depend on the incoming data.
Oh, it's going to be
is.
so awesome.
The
That's
other
so
thing is,
bullish
in
to hear him
second
say
half
the
of
word rate cut.
the
Just
year, you
to
have
hear
some
him
pretty
say
low
that is
readings,
great.
So it might be harder to make progress
I'll
as
take
you
it one
move
day at a
that
time, baby.
12-month window
I'm
forward.
dancing right now.
Nonetheless,
so
we're
happy
looking
right
for
now.
data that confirm
He's so
the kind
dovish
of low
right now.
readings that we had
Yes!
last year.
Yes!
And give us a higher degree of confidence that what we saw was really
Yes.
inflation moving sustainably down to 2%,
Yes.
toward 2%.
So dovish. That's what we want, baby. Look, your measured move here out of this.
Gina Smilik, The New York Times. Thank you for taking our questions. Per your comment to Anne that a weakening in the
Smialik.
labor market would be a reason to potentially cut rates, or at least a consideration in making a rate cut.
got context.
Would
She's done
continued
classes, right?
strength in the labor market be a reason to hold off on rate cuts? And just in general, if labor supply continued to rebound in 2024 the way it did in 2023, what would stronger hiring and possibly stronger growth mean
Thank
for the
you
path
for
forward
subscribing.
on
Jump on
policy?
in today, please.
Yeah, so if what we're getting is a lot of supply and a lot of demand, and that supply is actually feeding demand because
of
workers
the
are
channel
getting
now.
paid and they're spending, and that's,
Bum,
you know,
bum,
what you would
bum.
have is potentially kind of what you had last year, which is a bigger economy where inflationary pressures are not increasing. In fact, they were decreasing. So you can have that if you have
30-second
a continued
chart, just so you know.
supply side activity that we had last year with both with supply chains and also with growth in the size of the labor force.
But so strong hiring in and of itself would
Orders
not be a
back
reason to hold
above
off
the
on
weekly
rate
support.
cuts.
This is a big deal.
No,
65.
not all by itself, no.
I'm
I mean, we
excited.
saw, you saw last year very strong hiring and inflation coming down quickly. We now have a better sense that a big part of that was supply side healing, particularly with growth in the labor force. So in and of itself, strong job growth is not a reason, for us to be concerned about inflation.
WIF is getting some pumpage from 2 to 239.
Hi, Chair Powell. Neil Irwin with AIOZ. How do you assess the state of financial conditions right now? And in particular, do you view the kind of easing in financial conditions since the fall as consistent and compatible with what you're trying to achieve on the inflation mandate?
So we think there are many different financial conditions indicators, and you can kind of, see different answers to that question. But ultimately, we do think that financial conditions are weighing on economic activity, and we think you see that in a great place to see it is in the labor market, where you've seen demand cooling off a little bit from the extremely high levels. And there I would point to job openings, quits, surveys, the hiring rate, things like that are really demand. There are also supply side things happening, but I think those are demand side things happening. We saw, that's been a question for a while. We did see progress on inflation last year.
We're all waiting for rate cuts.
Significant progress.
This is bullish,
despite,
everyone. This is so
financial
bullish. We're
conditions
going up to 60.
Sometimes being tighter, sometimes looser.
Target is 66,700 for Bitcoin. All right. Big double bottom to the upside. See that beautiful double bottom?
Michael McGee with
bouncing off of
Bloomberg Radio
64.
and Television. Can you give us more color on
Mike
how
McKee.
the committee is thinking about inflation dynamics now? What we've seen at the beginning of the year, are they more one-off increases that will fade, or is there more of a secular turn with goods prices rising again and service prices staying sticky? And also, housing prices have been sort of the Godot of this cycle, in that you keep expecting them to go down and they don't. How does the committee see this playing out forward since you've raised your inflation forecast?
Short squeeze to the upside here for
I see the
Bitcoin.
committee's looking
Beautiful.
at the 2 months of data
Beautiful.
and asking the same question you're asking and
Gonna
saying
load up
we're just
again
going to have to see what the data show. As I mentioned, you can look at January, which is very high reading, and you can, and I think many people did see the possibility of seasonal adjustment problems there. But again, you got to be careful about dismissing the parts of the data that you don't like. So then February wasn't as high, but it was higher. So the question is, what are we going to see? We tend to see a little bit stronger, this is in the data, a little bit stronger inflation in the first half of the year, a little bit less strong later in the year. We're going to let the data show. I don't think we really know whether this is a bump on the road or something more. We'll have to find out. In the meantime, the economy is strong, the labor market is strong, inflation has come way down, and that gives us the ability to approach this question carefully and feel more confident that inflation is moving down sustainably at 2% when we take that step to begin dialing back our restrictive policy.
Well, you've talked about the desire to have confidence that inflation is continually moving down. Has the recent numbers we've gotten for inflation data dented that confidence at all?
It certainly hasn't improved our confidence. It hasn't raised anyone's confidence, but I would say that the story
Get the papers.
is
Get the
really
papers.
essentially the same, and that is of inflation coming down gradually toward 2% on a sometimes bumpy path, as I mentioned. I think that's what you still see. We've got 9 months of 2.5% inflation now, and we've had 2 months of kind of bumpy inflation. We were saying that it's going to be a bumpy ride. We consistently said that. Now here are some bumps, and the question is, are they more than bumps? And we can't know that. That's why we are approaching this question carefully. It is very important for everyone that we serve that we do get inflation sustainably down. And I think the historical record, every situation is different, but the historical record is that you need to approach that question carefully and try to get it right the first time and not have to come back and raise rates again, perhaps, if you cut inappropriately, prematurely.
Taking the wife to Olive Garden instead of grilled cheese sandwiches. Yay, man. Got to hook her up,
Thank
bro.
you, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask
Dude,
you,
huge pump for
you received
Bitcoin.
A letter from,
Huge pump. Hold up.
Well, the Federal Reserve, first independent body, understanding Congress has oversight over that. You received a letter from Senators Elizabeth Warren and Sheldon Whitehouse that said, calling on you
Nice
to lower
pump for
interest rates,
Bitcoin.
cut
All
interest
to the
rates because
target
it says,
here.
quote, the potential
65.8.
that it may remain too high for too long has halted advances
Massive
in
short
deploying
squeeze.
renewable energy technologies and delayed significant climate and economic benefits from these projects. So has higher interest rates caused that?
Whoa.
Have they? Well, first of all, I respect our, in our system of government, it is Congress that has oversight responsibility over the Fed. We place a
going to
tremendous amount of
66,000.
importance on our engagements with Congress.
We get through
and
this
always
big red
treat them
bar. Boom.
with great respect.
Nice pump.
In this case, I would say
called
those
it bullishness
are,
right
our
there. You knew we were gonna go
Our
up.
mandate
It's
is
so
for
simple,
maximum
right?
employment and price stability, and the other things that we do, and that's what we're trying to accomplish. We're trying to do that in a way that sustains the strong growth we're seeing,
Away
the
from the
strong labor
21,
market
see?
we're seeing, but allows us to make further progress with inflation. That's how we can best serve the public and leave the other issues, which in many cases are incredibly important, such as those you mentioned, leave those to the people who have responsibility for those.
There was another letter from 24 lawmakers saying that the higher rates are squeezing the working people. How do these letters affect what you guys are doing policy-wise?
We receive these letters with respect, and we write careful responses and address concerns. We listen, again, because we're talking to the people who, in our system of government, have oversight over our activity. So that's, but at the end of the day, we take that on board, but we have to make our judgments, and we have to stick to our knitting, which is maximum employment, price stability, supervise and regulate the banks, work on the payment system, the things that we do.
Claire. Thank you. Claire Jones, Financial Times. Thanks a lot for the opportunity to ask a question. As chair of the FOMC, would you want to see unanimity on the committee or something close to it, meaning no more than one dissent before you begin cutting rates? Thank you.
We're a very consensus-oriented organization, and we do try to achieve consensus and ideally unanimity. People do dissent. It's something that happens. Life goes on, and it's not a problem. We've always had dissents, and so and you respect thoughtful dissents very much. It's like you may not agree with some arguments, but you really want to understand them. So you may read a book that takes a position that you have long opposed, just to understand that book. So I treat dissents with real respect as well.
So Simon, one would be okay.
Simon Rabinovich with The Economist. Can you hear me?
Yes.
Okay, great. Obviously, inflation is some ways away from target. Unemployment, though, if you look at the projection for the full year, 4.0%. In February, we were already at 3.9%, so quite close to the median projection. Are you concerned at all that notwithstanding the very strong jobs growth, that in fact there may be some cracks appearing in the employment market? You talked about a significant deterioration in the labor market being a condition for easing rates. What would constitute that in your books? Thank you.
So we, of course, monitor it's one of our two goal variables. We all monitor the labor market very, very carefully, and I don't see those cracks today. And we follow all the possible stories that are out there about there being cracks. But the overall picture really is strong labor market. The extreme imbalances that we saw in the early parts of the pandemic recovery have mostly been resolved. You're seeing high job growth. You're seeing big increases in supply. You're seeing strong wage growth, but wage growth is gradually moderating down to more sustainable levels. In many, many respects, things are returning more to their state in 2019, which we can think of as normal for this purpose. That's job openings and quits, and surveys of workers and businesses are always interesting on this. How tight is how easy is it to find a job? How easy it is to find a worker? Those surveys have both come down. So the labor market's in good shape. you do see things like the low hiring rate, and people have made the argument that if layoffs were to increase, that would mean that the net would be fairly quick increases in unemployment. So that's something we're watching, but we're not seeing it. Of course, initial claims are very, very low, and if anything, have tracked down a little bit. So watching it carefully, don't see it. And when I say something, I use the term unexpected weakening in the labor market. So, we do expect the unemployment rate to, the forecast is that it would move up, I think, closer to what we see as the longer run sustainable level. That's just people's forecast, individual forecasts. But we're talking about something that's unexpected. That's where I'll leave it, though.
Steve Matthews with Bloomberg. You mentioned at the beginning of the press conference that the committee felt it might be appropriate to slow the pace of asset runoff fairly soon. I'm wondering, when you say fairly soon, does that mean that the committee would meet about this again in May, and a decision
bit of a double
could be
top
reached
M right there,
that soon?
resistance.
And I was wondering if you could also just describe the scope of what the committee is discussing here. You're at $95 billion of caps right now. Would that be cut about in half or something in that nature? Thank you.
So that is what we're discussing, essentially, is and we're not discussing all the many other balance sheet issues. We will discuss those in due course, but what we're really looking at is slowing the pace of runoff. There isn't much runoff among MBS right now, but there is in treasuries, and we're talking about going to a lower pace. I don't want to give you a specific number because we haven't had an agreement or a decision, but that's the idea. That's what we're looking at. And in terms of the timing, I said fairly soon. I wouldn't want to try to be more specific than that, but you get the idea.
I don't know.
The idea is, and
Soon's
this is
different to some people.
in our longer run
6
plans,
months, 2
that
months, 5 months.
we may
I don't
actually
know.
be able to get to a lower level because we would avoid the kind of frictions that can happen.
Thank you.
Liquidity is not evenly distributed in the system. And there can be times
Appreciate
when,
the super
in the
chat.
aggregate,
Very nice of you.
reserves are ample or even abundant, but not in every part. And those parts where they're not ample, there can be stress.
Rejected by
And that can
65.5,
cause
the
you to
weekly
prematurely
resistance and
stop
support.
the process
Gotta
to
break
avoid the stress.
65.5.
And then it would be very hard to restart, we think. So as something like that happened in 19, perhaps. So that's what we're doing. We're looking at what would be a good time and what would be a good structure. And, fairly soon is words that we use to mean fairly soon.
Oh, man.
And will there be a discussion about returning to an all treasuries balance sheet at some point?
So that our longer run goal is to return to a balance sheet that is mostly treasuries. I do expect that once we're through this,
I see a huge pump coming to 66,000 right now.
We'll come back to the other issues about the composition and the maturity.
It's about to
and
rip.
revisit
Watch this
those
short squeeze.
issues.
Here it comes.
But
We got the
it's,
liquidity.
not urgent right now. We want to get.
This is about to pump hard right now.
This
Look at this
decision
thing.
made first, and then we can, when the time is right, come back to the other issues.
Very likely. Let's look at our Stokes. Our Stokes are low, ready to pop. This thing
Victoria
looks
Guido
hot.
with Politico. Also on the balance sheet,
He's not going to say anything bearish.
Can you talk a little bit about how the
All the
outlook for the
liquidity's
banking
above us.
sector might impact your balance sheet plans? Do you worry that as deposits start to shrink that we could see more turbulence?
She's smart. I can tell when people are smart.
We'll
She's
be
smart.
watching carefully, but one of the reasons we're slowing down, we will soon enough,
So
fairly
bullish.
soon, I should say, slow down.
So bullish.
Is that we want to avoid any kind of turbulence. I wasn't thinking particularly about banking sector turbulence, but we had some indicators. The last time, this is our second time in doing this, and I think we're going to be paying a lot of attention to the things that started to happen and that foreshadowed what eventually happened at the end of that tightening cycle where we wound up in a short reserves situation, and we don't want to do that again. And I think now we have a better sense of what are the indicators. It wasn't so much in the banking system as it was around, for example, where federal funds is trading relative to the administered rates, and where secured rates are relative to the administered rates. Those sorts of things. We will always be watching the banking system for similar signs, though.
Well, is it also because you're not sure exactly how the reserve supply will react once the overnight reverse repo facility, drops nearer at zero?
Well, I think we broadly think that once the
we broadly think. He said he thinks
stabilizes
twice. He
either at
thinks
zero
about
or
thinking.
close to zero.
That's amazing.
That as the balance sheet shrinks, we should expect that reserves will decline pretty close to dollar for dollar with that. That's what we think.
Go to Jean. Hi, Chair Powell. Jean Young with M&I Market
Looks like we
News.
get a nice pump here.
I wanted to ask also about the balance sheet. Will you said that starting the
playing games,
taper
though.
sooner could get you to a smaller balance sheet size. Does that mean you don't have to make a decision on when to end QT at this point? And will you be setting up the process for deciding that sooner, or will you wait until we're close to the end?
So it's sort of ironic that by going slower you can get farther, but that's the idea. The idea is that
I'm watching this pump here. I'm in
with a
this pump
smoother
right
transition,
now. I jumped
You'll run much less risk.
I figured
of,
I'd have to take it. So
kind
I'm
of
in this flag.
liquidity problems, which
Looks
can
like we're
grow
gonna
into
rip.
shocks and which can cause you to stop the process
67K.
prematurely. So that's where, in terms of how it ends, we're going to be monitoring carefully money market conditions and asking ourselves what they're telling us about reserves. Are they, right now we would characterize them as abundant, and what we're aiming for is ample, and which is a little bit less than abundant, right? So there isn't
Ample,
there's not a dollar
He's
amount
so
or
funny,
a percent
man,
of GDP or anything like that
guy's
where we
hilarious.
think we have a really pretty clear understanding of that. We're going to be looking at what these what's happening in money markets, in particular, a bunch of different indicators, including the ones I mentioned, to tell us when we're getting close. Then, though, you reach a point, ultimately, where you stop allowing the balance sheet to run off, but then, from that point, there's another period in which non-reserve liabilities grow organically, like currency, and that also shrinks the reserves at a very slow pace. So you have a slower pace of runoff, which we'll have fairly soon. Then you have another time where you effectively hold the balance sheet constant and allow non-reserve liabilities to expand, and then that ultimately brings you ideally in for, brings it into a nice easy landing at a level that is above what we think the lowest possible ample number would be. We're not trying for that. We want to have a cushion, a buffer, because we know that demand for reserves can be very volatile, and we don't want to again find ourselves in a situation where there aren't reserves. We have to turn around and buy assets and put reserves back in the banking system the way we did in 2019-20.
65.5 is a huge deal, everyone. We stay above it. That's weekly resistance.
Marketplace.
I would love to see us close a weekly candle above 65.5 on Sunday night. This would be amazing. That would be a bullish sign for me.
More specifically,
I would take
what
that
data
bullish.
you're looking at that would give you that confidence?
Load up.
Sure. So most importantly, we're looking at the incoming
flag's
inflation
pumping right
data
now, I'm telling you.
and the
I'm in the
contents of
trade,
it and
it's
what they're
pumping.
telling us.
You do what you want. I'm
that'll
already
be,
winning.
and also the various
You do
components.
you.
So obviously,
I'll do
that's what we want. We want more confidence that inflation
Could easily lose that trade.
is coming
It's high
down
risk.
sustainably toward 2%. And I mean, of course,
Big
we'll
Red's
also
now
be
moved
looking at
above us.
all the other
Still
things
got
that
the
are happening in
liquidity
the
below,
economy.
but-
We'll look at the totality of the data, including everything, essentially.
There we go.
As we make that assessment. But the most important thing will be the inflation data that's coming in.
But are there things that you would give more weight to, like wages?
Wages is one thing. We don't. Our target is not wages. It's really inflation. But we would look to the fact that wages are still coming in very strong, but they've been wage increases. That is to say, wage increases have been quite strong, but they're gradually coming down to levels that are more sustainable over time, and that's what we want. We don't think that the inflation was not
broke out.
originally caused. I don't think mostly by wages. That wasn't really the story. But we do think that to get inflation back down to 2% sustainably, we'd like to see, continuing gradual movement of wage increases at still high levels, but back down to levels that are more sustainable over time.
This is Bookmap. It's a program. I sell in the description below. I get a commission if you'd like to jump on in. It shows you where the liquidity is.
Chair Powell, could you say at this meeting whether there were more officials who wanted to be careful and go slower than about rates than were at the last meeting? Was there that sense of maybe it's smart to wait?
Nice pump for Bitcoin. We called it off the fly.
I guess
for
I'd
you.
put it this way.
I showed you how to get into the trade. I made the trade live in front of you.
If you look at the income
live
inflation
trading
data
during
that
the
we've
Fed
had
meeting, you won't see it
for January
many
and February.
places.
I think very broadly that suggests that we were right to wait until we're more confident. So I think I didn't hear anyone dismissing it as not information that we should look at or anything like that. So I think generally speaking, it does go in the direction of saying yes, it's appropriate for us to be careful as we approach this question.
Brendan. Thanks, Chair Powell. Brendan Peterson with Punchbowl News. I wanted to ask you about central bank digital currency stuff. We've been hearing a lot from Republicans in Congress about what the Fed is or isn't doing in a digital dollar. But folks, I know you have said to Congress that you are going to wait for approval before the Fed does anything, launches anything.
Gave you that pump.
Folks like House Majority Whip Tom Emmer have said that the Fed is either actively researching or hiring personnel to study the implications of a CBDC.
Let's go, baby.
Can you give us any clarity on what the Fed is doing right now on a digital dollar?
Sure. So I think we've been pretty transparent on this, but I'll try harder. So we
ripping.
We are not
that flag ripped.
Getting ready to. We haven't proposed. We
you
haven't
would have
come
made
to a
gains with
conclusion that we
me
should
had you
propose
taken that flag, baby,
or anything like that. That Congress consider legislation to authorize a digital dollar.
Tearing it up.
And it would take legislation by Congress signed by the president to give us the ability to do what we think of as a CBDC, which is really a retail CBDC with the public of it. So we're just a long, long way from that. What we are doing, and I think what every major central bank is doing, is we're trying to stay in the frontiers of what's going on in digital finance. And it has many, many different areas. You know, it has applications in wholesale finance, in the payment system. And so we to serve the public, these issues have become very front burner in the last 5 or 6 years. We need to be knowledgeable about all that. So we actually do have people trying to understand things that are, but it's wrong to say that we're working on a CBDC and then we've secretly got a lab here where we've got one and we're just going to spring it on Congress at the right moment. We don't. I haven't at all in my own mind made a decision that I think this is something the U.S. should be doing. I just think it's something we need to understand, and we do have people who are keeping up with that as part of the broader payments landscape. That's how I would characterize it.
Mark.
So you do or you don't do it?
Thank you. It's Mark Hamrick with Bankrate. Mr. Chairman, April 27th will mark the 13th anniversary.
I sold
since
for
the
gains.
Fed
I'm setting up my
began
next
holding
flag for my
regular
next
news
possible
conferences.
attempt.
How important is that higher transparency been in your view, both for the proper functioning of the central bank and also in accomplishing your mission? And is there more that you and your colleagues can do on the transparency front, and what might that
I got to
look
run,
like?
but I'll let this run for you guys.
I generally think
I got to go pick up my daughter at school. But I'll let
actually
this
started, 30 years ago. 30 years ago.
Babe, in like 10 minutes, can you come down and hit
some
the
academics
end button?
Posited that
I love y'all. I got to go pick up my
transparent
kid,
central
man.
bank, if the
That's
public
like a dude. It's
understands your
probably end
reaction
soon.
function,
Keep watching
the
this
markets
flag
will
pump to
do
the
your
upside.
work
We
for
got
you. They'll
another
react to
flag
the
here
data.
that I'm going to start to project on.
And so it all happens
can
that
watch
way. And
this
so
happen.
there's been a
So you
march
don't
toward
really
greater and
need
greater
me, per se. You just
transparency.
need my mind.
And
I'm giving you my mind
that
and
certainly
my
Chairman
ideas
Bernanke advanced that.
and my
So
tools.
Chairman
So
Greenspan did.
everything's
Chair
here for
Yellen
you.
did.
Have a
And
blast, all
so
of you guys.
we went from four press conferences a year to 8. So now every meeting really is live now. I think that's a good innovation. I wouldn't want to turn it back. We also have done a bunch of other things. We have an annual supervision report, financial stability report. There's a long list of things that we've done. I think I mean, nothing comes to mind as really desperately in need of doing at this moment. We're very transparent. We have no shortage of FOMC participants speaking to the public through the media. And so that channel is full, I would say. So I think it's generally broadly helped and made things better, but not every day and in every way.
Well, to follow up, has there ever been a day where you wanted to put that genie back in the bottle somewhat?
Of course not.
Let's go to Jennifer for the last question.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. Not to harp too much more on confidence and inflation, but you did say earlier in this press conference that the recent inflation data hasn't raised anyone's confidence. But when you testified before the Senate a couple weeks ago, you told lawmakers that you are, quote, not far from receiving the confidence needed on inflation to begin cutting rates. So are you still of that belief or not? What are we to take by those words, not far?
So let me say my main message at that in those 2 days of hearings was really that the committee needs to see more evidence to build our confidence that inflation is moving down sustainably toward our 2% goal, and we don't expect that it will be appropriate to begin to reduce rates until we're more confident that that is the case. I said that any number of times, so those were kind of the main part of the message. We repeated that today in our statement. I also, to the language you mentioned, I really pointed out that we had made significant progress over the past year, and what we're looking for now is confirmation that that progress will continue. We had a series of inflation readings over the second half of last year that were really much lower. We didn't overreact, as I mentioned, but that's what I had in mind.
But given that you said that PCE for February, 2.8%, the estimate, and that we have been seeing PCE, core PCE, coming down by 10% every month, I mean, wouldn't you be at about 2.4% this summer, June, July, to a point where you could cut then?
Well, you know, we'll just have to see how the data come in. We would, of course, love to get great inflation data. We got really good inflation data on the second part of last year. Again, we didn't overreact to it. We said we needed to see more, and we said it would be bumpy, and now we have January and February, which I've talked about a couple of times. So, you know, we're looking for more good data, and we would certainly welcome it.
Thank you.
Thank you.
Thank you.